to another edition of the Rousseau Report. I'm your host, Dennis Rousseau. If you recall, in October 2021, we spoke to unprecedented markets. Then in August of this year, produced a session titled Market Correction Defined. And as mentioned, rarely do speakers revisit, retract, or own up to a false or misleading statement. Well, we re-examined a few of our past sessions that addressed declining markets specifically and questioned the statements that were made. Are we going to retract any of them? No. As a matter of fact, we're going to add more clarification and examine some of the volatility we see in the upcoming months. It seems no matter who you speak with in our industry, most concur our markets are changing. However, that economy that some say selling prices are increasing or remaining stable, conversely, buyers and sellers are sensing a decline in prices leaning more toward normalized value as it relates to a standard year-over-year depreciation versus the inflation we've been witnessing over the past year. But let's pause for just a moment and try to get a handle on recessions and their relative impact on business jet markets. First off, what is it? A recession is a business cycle contraction when there's a decline in economic activity, and they generally occur when there's a significant drop in spending, which can be triggered by a multitude of factors. Conversely, a healthy economy is when businesses are producing, consumers are spending, and supply and demand are near equal, which is good for everyone. During deflation, consumers hold on to cash because things will be cheaper tomorrow. Businesses lose money, cut costs, and employees, which we'll circle back to in just a minute. In rising inflation, consumers spend now before prices rise tomorrow, which sounds eerily familiar with what has happened in business jet markets over the past year. This in and of itself artificially increases demand, which raises prices, as inflation spirals out of control. According to data released this past week from the Federal Reserve, credit card balances hit $680 billion in Q1 of this year. As of Q4, we're at $840 billion. Revolving debt is $1.2 billion, and just a refresher, revolving debt does include credit card debt. However, it also includes credit lines such as home equity loans. Now, how does all this increase in debt affect business jet sales? Stand by. The U.S. debt, which is owed by the federal government, passed the $30 trillion mark this year for the first time, and just set another record in October, hitting $31 trillion. If you recall, at the beginning of this year, used car prices were nearing the cost of new, and less than a year later, they're falling like a rock. Now, similar to AircraftPost with business jet selling prices, the standard for automobiles is the Manheim Used Vehicle Value Index that tracks used vehicle prices. It dropped 10.6% in October for a fifth straight month. Doesn't sound that big, but it's the biggest decline in 28 years. Carvana shares declined 49% in 2 days, bringing its market capitalization to $1.3 billion, far from its $60 billion valuation last year. The housing market is also falling. Redfin reports that existing home sales dropped 34% in the year through October. We went from selling over 6.5 million homes per month to 4.5 million. Why? Let's take all that I've just said, put it into a central repository, shake it up, and turn the spigot. What comes out? Significant layoffs, and these are just those companies reporting over 500. All of this is almost an exact replica of 2008. So what does all this mean to the private jet industry? Well, one thing we do know is the first thing that companies cut are employees, and the second thing are aircraft. For the first time in years, the corollary between aircraft added to the market and transactions has inverted. Supply is increasing and demand is decreasing. What impact will that have on our inflated prices? So I say to the naysayers, look at the facts. Our markets are dropping. Let's take a closer look at transactions in select markets. In 2021, there were 784 transactions for these select models, compared to 340, less than half, in 2022 through November 11th. And again, some may say, we have 6 weeks remaining to the end of the year. Really? And we're not picking select markets to meet a narrative. However, out of the 70 current generation business jet models that AircraftPost tracks, not one outpaces the results of 2021. Even when narrowing the list down to the most popular models, the results are the same. Now, if you'll notice, there were 0 G4 transactions for all of 2022, although someone recently called me out and indicated there were a couple of off-market deals, which I simply can't identify. And if they were parted out or sold to a dealer, they wouldn't be reflected as a retail sale anyway. The reason for this scenario is that this 30-year-old aircraft, which served our industry very well for years, has reached its time. Economic and technological obsolescence have set in. It costs more to operate the aircraft than it's worth. Airframe and engine inspection costs are through the roof. And OEM support, encompassing avionics, airframe, engines, is nil. They don't want anything to do with it. The industry has moved on. There were 7 G4s on the market last year, 14 transactions. Today there are 15 G4s on the market with 0 transactions, and a similar scenario is playing out with many private jet models. The economic indicators that I track are all pointing to sluggish sales and increased time on the market. We're also following the trends in commercial real estate, where 37% of space under development is available, approaching the record of 39% set in 2008. Yes, pre-owned business jet prices went through the stratosphere over the past year, and I saw new valuation measures pop up to justify the rise in prices. And when you have markets like this, buyers line up and pay a premium for the privilege of ownership. We're entering the panic stage of the market, where prices can fall as quickly as they rose. Supply overwhelms demand, and prices slide even further. And when owners see a decline in price, they become desperate and liquidate. Now they chase the markets down, just as they chase the markets up. As always, stay tuned. Before we go, a few months back, I spoke about the EV cars and the fact that before we can embrace that technology, we need to build out the infrastructure to support them. And I showed this photo of a bunch of Teslas lined up for a charge in California. And then I came across this. Californians are asked not to charge their cars due to a strain on the power grid. Irony and hypocrisy in one. I'd like to thank AircraftPost for their support. And until next time, I'm Dennis Rousseau for the Rousseau Report. Thank you for tuning in.